Let's start by getting your thoughts on the market's performance. 6th straight session, the market's beginning to extend these gains, and it started slowly, but now we're beginning to see gain about 0.5%, 0.9%. So we begin to see a lot more interest in the multinational companies. Why do you think that's happening at this time of the year?
Yeah, let's stop back. Let's start again and look at it. Year to date, the market's doing 30%. Over the last 3 years, it's also doing close to 33%. And, that's just really exciting. It's really exciting for the market, and it's really exciting for the investors. I think the risk appetite for most investors has actually doubled. I think everyone sees the long-term gains in the Nigerian stock exchange, in the Nigerian markets. I think the key is it's now left to the other multinationals in Nigeria to take that next step towards listing. Right. I think the potential in this market is enormous.
Absolutely. And of course, we've seen quite a few investors from outside the country, the likes of Tiger Brands, getting invested in Nigeria. So pretty eventful year in terms of M&A activity. Yeah. Your thoughts on what we've seen this year and what we're likely to see going into next year?
The M&A sector in Nigeria is usually driven by 4 key sectors. We have fast-moving consumer goods, we have oil and gas, we have telcos, and we have the financial institutions. This year, we saw the Tiger Brands deal on the FMCG side. We saw the Starcoms deal on the telco side. But next year, I expect financial services to pick up. Last year we saw a lot of regulatory-induced mergers. Right. And next year, we're still going to see some drop back from those nationalized banks taking part in M&A activity or being acquired by some foreign investors. But I think we're going to see mergers coming from even the smaller banks, the regional banks. We're going to see them consolidating. Those efficiencies that they can get from consolidation are going to be key. The other thing is the FMCG sector. There's been a lot of interest. There's been a lot of interest from a lot of the South African companies, even companies from the Middle East, looking to get into our FMCG space. The 160 million population we have is enormous. The market potential is very enormous, and we've even seen currently ongoing talks and transactions about to take place in that space with very, very huge conglomerates. The question is, will these conglomerates come to the market? How will these conglomerates?
I was just going to get to that. To what extent is this likely to impact on the listed markets?
On the list, and that's the question. I think that's what we're still pushing for. We're pushing for more companies to list. We're pushing for more companies to come onto the exchange. On the telcos end, not a lot's going to happen. But on the oil and gas end, a lot of people are still divesting their onshore assets. A lot of foreign companies are still divesting their onshore assets. And, the PIB is definitely going to affect wherever petroleum industry bill is going to affect wherever the mergers go. Right. When it comes to on the oil and gas front. Right. So
staying on discussion around listings, this year pretty disappointing. I think many people will say we only saw 2 companies listed, and really you call them SME type companies in terms of their size. So nothing exciting, not a telco, not a large FMCG. But going into next year, many people say if you look at valuations now, especially if you're looking at FMCGs, people feel it's perhaps a much better time compared to last year to start saying, okay, I think I might get a fair price for my company if I list now. Do you think the valuations right now makes a more compelling case for listings next year?
Valuations are exciting, but they're not where they were in 2007, in 2008, 5 years ago, and that's the point. I think it's going to happen in a three-stage process. It's a 2-stage process to be exact, in a PPL type format, where those larger conglomerates that want to list will go out and do some sort of a private placement with foreign investors, get a feel for the market, and then get a feel for valuation, sort of a book building process, and then come out and list. I think if there's the right appetite out there, and because a lot of them want to list, they want to put their brand names out there, generate the true valuations for their firms, such as the Dangotes of the world. So, if the right valuations are in place, they will come to the market. But it's going to take a process. It's going to take a while.
Of course, the fixed income space has a direct impact on how equities do. We're beginning to see yields come down now. In fact, some people are suggesting that we may even see single-digit yields at some point next year. Your thoughts on the boost that this can give the equity space next year?
I think it's going to be very positive. I think yields are coming down. This is definitely going to affect the equity space.
So you expect another good year for equities next year?
Oh, definitely.
30% this year, many people say fantastic, especially in a global context. Do you think we could see something close to that next year?
I say we stay somewhere around 30% next year too. I think that's the right amount of growth you're going to see. When the right policies and the right programs from the government start to kick in and start affecting the real sector.
So things like the
power and infrastructure development, we're definitely going to see growth on all fronts in Nigeria and in all sectors.
And then, of course, I think one thing that could be exciting is the sale of those 3 companies you mentioned, the nationalized banks by AMCON. Recent news we're hearing is that the hope is that those deals should be completed by the end of next year. So perhaps something else for the market to get excited about.
The market is definitely excited. Everyone's trying to get on those deals. So
let's leave it there, Akinola. Akinola Jones, Head of Financial Advisory at Primera Africa Finance Group, giving us his thoughts on the Nigerian market.